Today is Thursday, November 10th, 2 days post-election day, and yes, the sun is still shining. Let's take a look at some sectors. I wrote for Barron's yesterday about the great Trump rotation in the market, and that is still continuing today. Financials up first. Just take a look at this chart. Let's get rid of that. And you can see a nice breakout here above this short-term resistance, and even a little bit deeper. You can see this one back here. That's last year's high. So quite a breakout move. I mean, that's serious. Huge volume on the ETF yesterday. And it's pretty much a broad-based within financials type rally. Just for kicks, take a look at the weekly chart. And you can see where this thing stands in relation to the financial crisis. So it's still got a long way to go to get to the old highs. But this is a pretty good sign. Clearly overbought at this point. But a lot of volatility. It's really hard to play this thing. I certainly would not be chasing it right here. Although overall, technically, it looks pretty good. Another big winner, healthcare. Now, healthcare was the big loser since the summertime, lagging the rest of the market by quite a bit. Significant reversal 2 days ahead of the election. And then the breakout here. Again, I don't think I want to chase this thing. I want it to pause a little bit. It did break through this line yesterday, but it was just way oversold, so I'm just a little leery of chasing it here. That doesn't mean it's not going to be better in a month or two, just looking for short-term timing. All right, who else is moving? Let's see where the money's coming from. Utilities. Clearly in a downtrend already, getting crushed, interest rates going up. Yield curve also getting steeper. That's another reason why the financials are looking so good. And where else is the money coming from? From technology. It's hard to tell from here, but this was your leading sector for quite a while and has not hit new highs. And you saw the breakdown. I think we looked at a video on this last week on Amazon and Google and those things, and the money really came out of there. So I think this sector's kind of had it for now. Doesn't mean it's not going to pick up again with a breakout, but money's coming out of here and going into the others that are doing much better. And finally, well, not finally, but industrials. Look at this move. This is an infrastructure play and a defense play. Serious breakout above resistance. Just put it there and just look at the weekly chart to see where that is in context. And you can see this is new highs. So this is a leading sector, and I think it will stay leading for a while. The question is, do you want to buy it here? And well, look at RSI, scooted way up there. I don't like these things that go from these low levels, break out to new highs, and they're overbought already. Doesn't mean they won't consolidate a bit and then go higher, but just worried about getting caught up in the excitement following the rally. And one that's moving today, wasn't moving the other day, was restaurants. Or I should say all consumer staples, but restaurants in particular. Why is that? Well, it's another Obamacare thing. If that gets repealed, the feeling is small businesses will hire more, and that will be good for this kind of business. So there you have it, the Trump rotation out of tech and certainly out of interest rate sensitives, and that includes consumer staples. Look at this, a new low. Consumer staples have a lot of high dividend payers. So out of these interest rate sensitives and technology into financials, infrastructure and defense, and healthcare. Not all healthcare, mostly pharmaceuticals. There you have it, the great Trump rotation. World did not end, market goes on, and you just got to change your stance and take advantage of what the market gives you.